You're watching NDTV Profit. Thanks for tuning in. We are in conversation with the management of Astral. Savlani joins in to talk about the quarter because I would call this as a quarter of recalibration, but with a strong quarter-on-quarter recovery. Simply because if you see last 2 or 3 quarters, PVC prices were largely unstable. This quarter, there is a bit of stability, more importantly, margins at the same level YOY, which to my mind is a positive. Mr. Savlani, how would you term this quarter? Because you've lived through now 2 or 3 quarters of fair degree of volatility.
Yeah, you are right. The industry was passing through a very tough challenges. You see on a yearly basis, the polymer price was dropped by close to about 18%. So when there is a drop in the polymer price, our industry is the pass-through industry. The very same day, we pass on this drop to the market. But if you see the number, in spite of so much of challenges, we are not able to maintain our volume growth, but also we are able to maintain our EBITDA margin. In this difficult time also, we have grown our GP also by 1%. So clearly you can see when the industry was degrowing by 5-6%, our company was able to grow 3-4%. So clearly we have gained the market share in this difficult time. Secondly, whenever the polymer prices are dropping, there is always the inventory losses. That in spite of absorbing that inventory losses, we were able to not only maintain our EBITDA margin, but improve our EBITDA margin on a year-on-year basis. So that was also the another good thing about the company. So all these things suggest that now the worst is behind us. Whatever the bottoming out was to take place in the polymer price is almost going to be done in this quarter. And from here on, some stability will be there and some improvement into the polymer prices will also be there. So most of the loss was because of the destocking by the dealer and distributor community. Normally dealers and distributors both put together sit with between 6 to 8 week inventory. Now they have come down to almost 2 to 3 weeks inventory. So that has given us the big dent, not only to us, but the entire industry. But it is one good thing about Astral is that we were able to maintain our margin, while other players in the industry, most of the players have lost almost 25 to 40% kind of EBITDA last year, while we were able to maintain our EBITDA.
And I'm going to ask this to you as to how, but before that, Mr. Savlani, yes, pipes volume growth. I mean, when I look at your revenue miss about versus what, let's say, brokerages were thinking of, they're saying that the same can be attributed to subdued pipes volume growth, which was about 1.3% versus estimates of about 3%. So did volumes degrow much more than what was anticipated?
See, street may be expecting always the higher things from the Astral, but we have to also equally see the market conditions also. When the market conditions are not conducive to the industry, in that case, unnecessary dropping the price and pushing the volume doesn't make sense. The most of the other players you see, they have just dumped the inventory and they lost the margin. While Astral believe that dropping the price is very easy, but again, regaining the price in the industry is going to be a big challenge. So that's why we took a call that we don't want to unnecessarily dump the inventory at a lower price in the market. So we sacrifice maybe 1 or 2, but in spite of that, we have gained the market share. We have not lost the market. So that's a positive thing about the Astral.
Okay, so 2 questions, Mr. Savlani. One is on the market share. I mean, is there a formalized market share gain that you talk about, and can you talk about that, part 1? Part 2, this whole piece around inventory losses that would have been there, obviously. Could you give some clarity around what is the nature of these inventory losses? Do they continue into quarter 1 as well as you reported in the month of July?
So like till the polymer prices will continue to be a dropping side, then definitely inventory losses will be there. But the best part on Astral side is that we compensated that losses with the change in the proportion toward this value-added products. So we focused during last year maximum on the value-added products. So that has given us the good support, and because of that we were able to absorb not only the losses, but we were able to maintain our margin. So that was the positive side for Astral. And going forward, I think Q1 again the polymer price had dropped. Only yesterday some uptick has taken place, 2.5% price rise was there from Reliance. So now upward journey has just started. We have to see whether it is going to be a sustainable kind of thing or whether it will take some more time to sustain. But yes, definitely 6.5 rupee drop was there in Q1. Again that 1.5 rupees rise is there. So still losses are there in Q1. But we are of the view that Q1 will be the last quarter. Afterward, at least downward trend will not be there. may take some time for the upward trend, but at least this quarter we will be seeing the bottoming out.
You got it. You got some approvals too, which I will talk about at the end. But just one quick follow-up, Mr. Savlani. You've seen multiple cycles, right? One is, of course, pricing, which is not in your control. What about volumes? When do you see the change in volumes happening? Could it happen in the first half of the current calendar? Because last year, the first half, the economy went through a substantial pullback because of elections, monsoons, etc. Can there be a base effect positive as well on volume growth in the first half of FY26?
So if you see the last year Q1, we were almost up by 15-16% in volume. So base was very high in the last year.
Okay.
Q2 onward, the problem started. And then the volume started dropping very sharply post the election. I think election result was somewhere in June. So from June onward, the dropping started. And there the polymer price also dropped in the month of June onward. So that has given the sizable dent to the volume. And the biggest drop in the volume mainly was because of the destocking from the dealer and distributor. Now, dealer and distributor will do only restocking when they see that the prices are going to go upward journey. So 2 or 3 price rise continuously will take place. Then dealer and distributor have no choice but to rush to do the restocking. And that can only be possible if the continuous price rise happen in the polymer. So 2 things are going on in the industry right now. One is the BIS standard. When this BIS standard will be implemented, there are high probability that a lot of unorganized player will suffer, and that volume will shift to the organized player. Secondly, the many PVC players from China, which is dumping the material in India, that will also stop sizably because they will not be qualifying for the BIS, so they will not be able to export the products to India. So that will lead to the polymer price rise. So that is going to help to the industry. Secondly, government industry players of PVC, they already initiated the anti-dumping duty. So that can also come in the near future. It is very difficult to quantify the timeline, but definitely this year we are expecting that is also going to be there. If that will also happen, then the low-cost polymer which is dumped in India by China, that will stop. And that also going to give the rise to the polymer price. So if any of the things will happen in the coming time, then the dealer and distributor will rush to the restocking, and that itself is going to give the good volume to the industry. And that is what we are expecting in the current year. And the natural volume growth of the 7-8% of the industry will be there. So then double-digit growth will not be a big challenge if any of the things will happen.
Hi, all right, welcome. And thanks so much for tuning in. You're watching Ask Profit. You were just listening to the management of Astral. Particularly good set of numbers, and the management confident about the way forward. The stock is trading higher by as much as 3%, and quite a few stocks reacting to earnings either on the upside or on the downside. Let me mention a couple to you. But before we get into those earnings reactions, in fact, let's talk about the benchmark. It's about 0.75% lower, but has recovered from the low point of the day. The broader markets are doing better than that, in fact, at this juncture. And you have the mid-cap index that's trading with cuts of about 0.2%, and you have the small-cap index that's just about flat at this point. I do want to talk about contributors on the Nifty 50 as well. Let's pull that up and talk about it. You have Reliance Industries. You have Reliance Industries as well as HDFC Bank, ICICI Bank, that are leading the declines and contributing the most to those declines. You have Bharti Airtel, Tata Steel, IndusInd on the other side that are gaining ground. Let's talk about IndusInd Bank though, because this stock is something that is gaining in trade. There was an anticipation that it would see a little bit of pressure, but the interpretation perhaps by certain people is that the worst may be over. Of course, you would be well advised to have caution with regard to trading of IndusInd Bank, particularly if you are contemplating using leverage, because things can turn quite dramatically. A lot is still in the air as to what will happen with the top management and the investigation that has to happen with regard to IndusInd Bank. But in the meanwhile, let me get our experts on board. We've got Kush Bora of kushbora.com as well as Shahina Muqaddam, who is joining us this morning. Thanks so much for joining in. Let me take a very quick view on the benchmark, Kush, first with you. And what do you see as the key levels to watch today?
Hi, first of all, very good morning to all. I don't think that there's too much of a downside left. If you ask me, 24 500, 24 400 is a good strong support zone. Nifty's already broken one support zone of 24 700, but I think immediate support comes in at 24 400 500 zone. Also, the 20-day moving average support comes in at that level. So I think all in all, this could be a good buying opportunity from a near-term perspective as well. The only thing being that the markets, even though they've recovered from the low point of, they haven't really shown any kind of a meaningful rebound. So I'll be a little watchful on that front. Even Bank Nifty 54 400 does look like a support, which could act up. So all in all, a little constructive, and this dip from a near-term perspective also could well turn out to be a buying opportunity.
All right, let's talk about the questions that have come through already, and quite a few of you have written in. There's a number on the top of your screen where you can send us messages, and on the bottom of the screen you can see the landline number where you can call us. Let's take the first question today from Sunil, who's writing in from Visakhapatnam. Man Industries is the name of the counter that he wants to know about, and in fact this is a stock that's reacting to earnings. If I remember correctly, I may actually have that wrong, because there are quite a few earnings that have come through. In any case, he's bought at levels of 316,000 shares have been bought, and he's in the green. Shaina, very good morning to you. The question is, does he hold on based on the fundamentals?
Yeah, actually he does, because the numbers are out and the numbers are pretty good for the March quarter. And going forward also, I believe, while the raw material prices are remaining stable, I think the order book position is again improving. So it's a hold from here.
Hold on Man Industries. All right. Let's take the next question. Vishwanta Reddy is writing in from Madanapalle and asking about NBCC, border levels of 57. He's asking whether to sell or to hold at this juncture. He's in the green, and well in the green. He's making more than double the money at this point, or just about double. What's the view on the charts, Kush?
Fairly positive, Alex. The rebound on this one has been, very encouraging. You've seen the crossover of the 20 and the 200-day moving average just a couple of sessions ago. The stock is sustaining or at least maintaining the gains that it had made over the last week or 10 days or so. All in all, I think there is a good chance that the stock could head further to about 120, and once that is taken out, a 132 kind of a level also. It's not overheated, so I wouldn't even suggest booking a partial profit, although I will suggest a trailing stop loss, and that comes at 104. So you should continue holding on to your position with a stop loss around the 104 mark, or in his case, trailing stop loss.
Trailing stop loss is advised on NBCC. We've got Dheeraj calling us from Hyderabad, the first caller of the day. Dheeraj, very good morning to you, and you're asking about arguably the stock of the day, one of the stocks of the day. What do you want to know about?
Sir, yesterday I bought these shares at 106.95, sir. So to 2,230 shares.
Yeah.
So today it touched the high of around 117 rupees.
Yes.
Could I hold it for some more time, or should I book my profits and shift to something like some other counter, or should I hold in this counter is my query, sir.
So you bought this yesterday, you say. What was the trigger for you?
Yesterday, they declared their results yesterday, sir. So
Yes.
Seeing the result, as soon as I saw the result, I just bought the shares, sir.
Okay. But, okay, I need to check my data, because I thought that the numbers came in post-market hours. Maybe I'm mistaken, because if you've seen the numbers and then bought, then that's a different matter. But the stock is up and about, 5.4% up or so. The question is for you, Shahina. I'm not... Wait, actually, let me confirm. Dheeraj, you have a short-term perspective on this?
Yes, sir. For the next 3 months.
Okay. So since it's a trading call, apologies, let me go to Kush on this. Kush, do you have enough data listed last year, right?
It did. From a very near-term perspective, I guess there is enough data to give a view. My suggestion would be to book partially about 50% and hold the rest with a trailing stop loss of 108, slightly above his buying price. The reason being that yes, the stock has indeed reacted positively, given a breakout, but it's a gap up, and typically you do see these gap ups fill in. Also the high that it made near the 117.64 mark, that's not sustained and the stocks come down. So not a bad idea to book 50% right now and hold the rest with a stop loss around the 108 mark.
All right, Kanan has got the next question, and he's asking about Trident Limited. He's bought at levels of 37, and he's asking, at this juncture, is this a good idea to hold? He's incurring a loss at this point, specifically saying, is it wise to hold on to this, or should I consider this bounce to exit? If yes, is there any chance that it could come to his buy price so that his loss is minimized? Let's pull up the chart and see what it's done in the recent past, just so that we have context for the conversation. This is the intraday chart, but let's pull up the last month. There you go. So over the last week or so, it's gained about 14% or thereabouts. Kush, coming back to you, what is the possibility of it hitting 37 in the near term? Would you hold for that value, or would you exit at this point?
No, I'd give it a sufficiently high probability for him to hold on to this one, because the move has not been erratic. It has been with sufficient pauses, on the way up. Also, the recovery is rather meaningful. Weekly setup also very encouraging with high formations, in place. Volumes also picking up. 200-day moving average was crossed yesterday. Even though the stock is a little muted today, it's still sustaining above that, which is a healthy sign. So my suggestion, continue to hold. Now you should keep a stop loss near the 30.5 mark and hold on. This momentum, if the market sustain and the momentum, picks up, there's a good possibility that he could exit at 37, or at least fairly close to that price. So I think it's a hold, stop loss around the 30.5 mark.
All right, and not too far away from the current market price, but that's a view. Hold for now is a view on Trident Limited. Ajay is calling us from Ambala. Ajay, namaskar. क्या सवाल है आपका?
या गुड मॉर्निंग सर, गुड मॉर्निंग मैम. सर मेरा क्वेश्चन बजाज ऑटो पे है. सर मेरा पास 200 शेयर्स हैं 83.20 रुपीज पे. सर रिसेंटली अभी न्यूज आई है कि इन्होंने केटीएम पे 100% स्टेक लिया है. तो ये पॉजिटिव न्यूज है कि नेगेटिव न्यूज है फॉर दिस स्टॉक सर? बेसिकली होल्ड करूँ इसको इस पॉइंट ऑफ व्यू पे कि सेल कर सकते हैं अभी?
ओके, तो केटीएम न्यूज़ के हिसाब से आपको डिसाइड करना है कि आपको होल्ड करना है कि नहीं. मगर आपका लॉन्ग टर्म फंडामेंटल व्यू पॉजिटिव था, इसलिए आपने ले लिया? या
हाँ, यस सर मैंने 3 दिन पहले ही लिया था सर, पॉजिटिव था इसलिए रख लिया. बट ये न्यूज़ आई है, अब ये रिसर्चिंग में मुझे इतनी नॉलेज नहीं है. दैट इज आते हैं कि सर ये ठीक रहेगा कि मुझे कि नहीं, कि या तो हीरो मोटोमेट ले लूँ उसको बेच के. दैट इज बेसिक.
अंडरस्टूड. ओके. All right. So it's a clear question, but the question mark, Shaina, on two-wheelers, and maybe you can answer this in Hindi. Basically, the volumes in the two-wheeler space in India are not anticipated to do particularly well. They have been a little soft, but then if rural turns around, then the question mark goes away, so to speak. One would assume that volumes pick up. So between Bajaj Auto, in which he's seeing gains, and Hero MotoCorp, which would you prefer?
बजाज ऑटो ही प्रेफरेंस रहेगा. अभी आप होल्ड कीजिए. एक तो उनका बोनस इशू अभी एक्स डेट अभी उनको अनाउंस करना है. काफी अच्छा बोनस इशू है 4:1, तो उसमें टैक्स प्लानिंग के लिए भी आपको मदद हो सकती है अगर आप और थोड़ा टाइम रुक जाए. दूसरी बात है कि उनका जो एक्विजिशन है, ये जो उनके जो वॉल्यूम्स और उनका जो मार्केट शेयर थोड़ा लॉस हो रहा था इन द स्मॉलर सीसी बाइक्स, वो अभी थोड़ा ऑफकोर्स लॉन्ग टर्म है, मतलब मीडियम टू लॉन्ग टर्म जब वो एक्चुअली उसको इंटीग्रेट करके टर्न अराउंड कर सकते हैं, तो वहां पर उनको ये अच्छे भाव में मिला है. तो एज ऑफ नाउ बजाज ऑटो आप होल्ड कीजिए रादर देन स्विचिंग टू हीरो.
All right, so that's a view. Hopefully that answers your question. We've got the next question from Siddharth, who's writing in from Kolkata and asking about a stock that has been in focus this week because of a significant development, Protean eGov. It was in lower circuit on account of the update that it would not be getting a renewal of PAN 2.0, which was a significant contributor to its earnings. And having said that, he has bought at levels of 900, so he's still in the green. Should he exit, or should he hold on from a long-term perspective? I do want to point out, by the way, Siddharth, and anybody else who's interested in Protean eGov, that we will be featuring the company and speaking to the management on the next show at 11:30, which is Know Your Company, and we'll be doing a deep dive as we normally do and giving you ratings about various parameters, including and not restricted to the valuation picture. But on the fundamentals, would you say, Shaina, that this is a hold or would you exit, considering that a large chunk of the revenue opportunity is being taken out?
I would exit as of now. One is because that segment, PAN card segment, whatever you call it, in terms of which part of it, the distribution part of it or the back end part of it, etc. But it does contribute 50%, around 50%, I believe, of their revenues as of now. So incrementally, over a longer term period, this business would come down replaced by some new businesses. But what I believe is that for all this to happen, the valuations are pretty expensive currently. So I would say that it is better. It's a small cap stock, so there are better opportunities available. So I would say exit and switch.
Okay, all right. Parag Visaria is writing in from Mumbai and asking about a couple of stocks. Now, you don't need to speak about both, Kush. I would actually encourage you to speak about one of the two, but I'll list them out for you. Voltamp Transformers and DAM Capital. I'm guessing DAM Capital, you may not have a view in any case because it's a relatively new listing. From current levels for the next 6 to 9 months, what would you prefer?
So, incidentally, I'd say there is enough data for Voltamp for sure from a near-term perspective. Dan, yes, but from a 6-month perspective, I'm afraid not. So, yes, I'd stick to Voltamp Transformers. A good move on this one. The stock has actually seen a fair degree of up moves. What's happening is the volume is not something that is putting me at great comfort. I mean, it did have a good move, volume-backed move from 7,200 odd levels, but now the volumes seem to be shrinking. Also, there is a mild negative RSI divergence popping up. So my suggestion would be, if you want to buy, wait for a mild dip close to the 80 to 50 mark. And as in when you get that, 8,000 will start acting as a stop loss on the way up. For targets of 8,600 and about 8,850, you could buy. So all in all, the medium-term structure is positive, but from a very near-term perspective, as I said, volumes missing, negative RSI divergence, suggesting that the stock could perhaps see a pullback. So 80 to 50, perhaps 8,300, those are the levels that you want to enter for a favorable risk-reward ratio.
All right, we've got an important story that is coming through, and this is an exclusive story. And this has to do with the weekly expiry of derivative contracts. Remember, this is something of a talking point over the last several weeks, and the regulator has gotten involved in order to finalize the proposal to fix all equity F&O expiries either on Tuesday or on Thursday. That's the update coming in. Charu is picking up information from her sources. Charu, what can you tell us about the latest here?
Hi, Alex. As we reported previously that the regulator is very keen on finalizing its proposal of keeping only 2 weekly expiry days, that is Tuesday and Thursday. Now we've come to know from some sources that India's leading stock exchange, NSE, has approached the regulator requesting it that Tuesday should be given to them as their expiry day. Now we should also consider the fact that already the oldest boards of the country, Bombay Stock Exchange, is using Tuesday as their expiry day, which explains why so much of noise is around this news currently. However, no decision from the regulator yet. The request has been submitted. It may or may not be considered, and it remains to be seen what other developments take place as the circular comes out.
Okay, all right. And quite the reaction in the stock as you are speaking as well, Charu. Stock has dropped quite precipitously from the high point of the day, which of course is declined, but it's down now about 4%. So watch out for that in trade. Just a simple explainer is that quite a bit of the volumes in the derivative space would shift from Thursday if the NSE was to shift to Tuesday, and the BSE already has its expiries on Tuesday. So that's increased competition in the space. You want to come in on this, Shahina, very quickly. If this does come through, it's negative for BSE. That's the simple assumption here.
See, I hold both BSE as well as NSE, so I wouldn't comment, but I'm just saying that BSE has its ex date for bonus tomorrow.
Okay, I understand that. All right. Do you have an opinion on this, Kush? Because you look at the space very closely on the derivative side.
Yeah, so if it's going to be just 1 day of expiry, then I think there could be some pressures coming in on BSE. But if NSE were to shift to Tuesday, what stops BSE from shifting to Thursday and maintaining at least some portion, or rather a great deal of portion of the volumes, rather than losing them to NSE. So I'm actually quite interested to see how this plays out, this tussle. But yeah, I mean, if the same day, 1 day expiry thing comes in, then BSE perhaps could go ahead and take a hit. And
I think we just about have a technical issue with Kush's frame, and we'll get him back. But the point that he was making was fair. If there are 2 days of expiry that are proposed by the Securities and Exchange Board of India, either Tuesday or Thursday, and if the NSE is proposing to shift to Tuesday, what's stopping the BSE from shifting to Thursday as well? We've got our next caller, Sumant, who's calling us from Bihar. Very good morning, Sumant. What is your question for us today?
Hey, hi, good morning, sir. Finally, I connected with you. So I'm having two queries. I hope we will resolve my problem. I mean, problem actually, I can say.
Okay.
So I'm having SW Solar, right? And my buying price is 353. 350 shares I have at buying price 455.
Okay.
So I need your suggestion from your panel team. And second, I'm having Happiest Mind and Birla Soft. So just which one is the better stocks between two?
Okay. Sumant, can you tell me what the second one is? Can you name the stocks again, please?
Second one, between Birla Soft and Happiest Mind.
Okay. And you've not shared the... See, the reason why we have one stock is it's easy for us to pull up the share price, pull up your acquisition price and all of that. So, Shaina, if you've heard this, he's acquired SW Solar at elevated levels. I think the numbers on the screen are incorrect. He was talking about 450 levels, if I'm not mistaken. Sumant, what was the buy price for SW Solar? Sumant? Sumant, if you can hear me, what was the buy price for SW Solar?
Yeah, I can hear you. Can you hear me?
Yeah, I can hear you. What was the buy price for SW Solar?
450.
450, okay.
450, yeah.
Got it. All right, so let me stick with that, and Sumant, you can connect with us perhaps tomorrow to ask the second question. But Shaina, I'll come to you on SW Solar, yeah? 450 rupees is the buy price, and he's lost value. So should he hold on at this point?
Yeah, actually, he must have bought it quite recently in the last couple of months, and the stock has corrected substantially from there. Having said that, and of course, that was because of poor numbers that we saw in the first 9 months. Having said that, I think the last quarter, fourth quarter numbers were pretty strong. So as of now, I would say that he can continue to hold. And besides, this sector is a bit lumpy. So he can continue to hold, but keep a stop loss close to about 270. And I heard a second question actually, where he's asking between two IT stocks. Birla Soft would be my preference over Happiest Minds as of now. In terms of valuation, Birla Soft is looking a bit better than Happiest Minds, but both look good if you're holding it for the long term.
But you might want to consolidate your position in one, and if you are doing that, then you can follow the one that you said. Is that right?
Yeah.
Okay, cool.
Birla Soft.
All right, just a follow-up, very quick follow-up. SW Solar in the space of the renewable energy pocket, is this the best play, or is there something else that you would recommend, Shaina? I know you've said hold with the stop loss, but is there a better play? Inox Wind looks, in my view, more interesting because, of course, valuations there also are not cheap, but I think the order book that they have on hand is quite substantial. So there also with a stop loss of maybe close to about 175, I would say a target of 200, 210 is more Apologies, I have to cut you off, Shaina. Apologies for that. We are listening to SEBI Chief Tuhin Kanta Pandey speaking live. Let's listen into what he has to say.
And inclusion on an unprecedented scale. These developments, combined with strong macroeconomic fundamentals, policy stability, resilient financial market ecosystem, are creating an enabling environment for sustained capital formation and productivity-led growth. While India's banking system continues to play a vital role in credit intermediation, it alone cannot meet the vast and long-term capital requirements of a rapidly growing economy. The scale of investment needed to fund infrastructure, clean energy, innovation, and industrial expansion, demands diverse and sustainable sources of financing. Capital markets bridge this gap by offering a platform for equity and debt financing, enabling businesses to access patient capital without over-reliance on debt or collateral. How are the capital markets fueling India's development? Well, the Indian securities market is not merely a facilitator of financial transactions, but a powerful engine of capital formation. Our capital markets have become an essential channel through which domestic savings and foreign investments are directed into productive economic activity. This is helping fuel innovation, entrepreneurship, job creation, and infrastructure development. And the Indian capital market has seen remarkable growth over the past few years. At the cost of repetition, many previous speakers have spoken about a lot of statistics. I would also like to focus on some of them just to give you the size of the Indian security markets today and what role they can play. Over the past 10 years, around 93 lakh crore has been raised from the capital market through both equity and debt issuances, supporting growth across sectors. Our market has facilitated average equity issuance of around 2.2 lakh crore per annum over the past decade, supporting business expansion and innovation. FY25 marked a record year with 1.7 lakh crore raised through 320 IPOs, the highest number ever, underscoring the growing depth and vibrancy of our equity markets. Market capitalization of listed companies has risen from around 150 lakh crore at the end of FY19 to rupees 423 lakh crore as at the end of April 2025, reflecting strong investor confidence and robust corporate performance. Average daily trading volume have grown significantly from rupees 35,000 crore in FY19 to over 1 lakh crore now, indicating deeper liquidity and broader participation. And let's look at the investor participation itself. The number of unique investors in security market ecosystem has almost tripled since March 2019 to reach over 13 crore now. Of course, demat accounts are much larger, over 19 crores, but unique investors are over 13 crore, signaling the growing trust of retail investors in capital markets. However, there is still a huge potential to expand further. If you just compare the US market and Indian market, the level of retail participation in India is still much lower than US. And in many respects, we are, sort of following the dynamism of US markets. India's population is predominantly young, aspirational, and increasingly financially aware. This demographic dividend presents a unique opportunity to deepen and broaden our capital markets. As per industry estimates, around 1/3 of Gen Z investors are already participating in the securities market, an encouraging sign of growing financial engagement at an early age. This trend reflects not only the rising trust in formal financial systems, but also signals a significant opportunity for long-term wealth creation and inclusive participation in the nation's economic progress. Assets under management. The retail participation in securities market is further reinforced by the growth in mutual fund industry, with asset fund under management increasing from 24 lakh crore at the end of March 2019 to 70 lakh crore as of end of April 2025. Mutual fund SIP flows have been seen steady growth over the years, with annual contributions rising from less than 1 lakh crore in FY19 to 2.9 lakh crore in FY25. As a result, SIP AUM has expanded nearly fivefold, that is from 2.7 lakh crore in March 19 to 14 lakh crore as at end April 2025. Alternative investment funds are playing an increasingly important role in India's journey towards becoming a Viksit Bharat by channelizing long-term capital into high-impact areas such as startups, infrastructure, innovation, and emerging sectors. AIFs are helping to bridge critical funding gaps that traditional sources may not fully address. They support risk-taking, promote entrepreneurship, and enable the development of future-ready sectors, which are the key drivers of a developed economy. The significant growth in AIF investments from 1.1 lakh crore as of March 19 to 5.4 lakh crore as of March 2025, which is 5 times, reflects the growing relevance and potential to catalyze sustainable, inclusive economic growth in the decades ahead. Portfolio management services, PMS, which facilitate long-term investments, have seen their assets under management grow from 2.8 lakh crore in FY19 to 7.2 lakh crore in FY25. We are also witnessing the increasing importance of new investment vehicles such as REITs and InvITs. My previous speakers have also said it before, which are gaining traction and have the potential to significantly support infrastructure and real estate development. These instruments offer long-term investors access to stable income streams while providing infrastructure developers a means to recycle capital and fund new projects, thereby accelerating India's core sector growth. At present, we have 6 REITs and 26 InvITs registered with SEBI, signifying the potential to mobilize long-term capital. REITs and InvITs have mobilized 1.5 lakh crore over the last 5 years. Let me come to the foreign investments, FPIs. As regards foreign investment, the long-term trend of foreign portfolio investments in India remains strong. The equity assets under custody of FPI has increased from 21 lakh crore in FY15 to 69 lakh crore as at end April 25, representing around 17% ownership in Indian listed companies. Reinforcing sustained global confidence in India's growth story, India's share in the MSCI Emerging Market Index has risen significantly from less than 9% a decade back to 19.2% as at end of April 25, highlighting the country's growing weight in global portfolios.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to Welcome back. You're watching Ask Profit. We interrupted regular programming to listen to what the SEBI chief Tuhin Kanta Pandey had to say, and he was enumerating the progress that has been made in the capital markets in the recent past. Let's go back to the questions that we've gotten on our various social media platforms, and we've got the next one from Mr. Ekambaraya, who's writing in from Hyderabad. He's asking about Varun Beverages, a stock that he's bought at levels of 625. He's holding a number of shares, 150 or thereabouts, and he's wondering what the long-term view is. Should he book losses and buy something like a United Beverages? So essentially, he wants to stay with the beverage space. Shahina, what's the view here? Quite a few of these Alco-Bev companies have come out with a decent set of numbers. Volumes have been reasonably good, and I think margins have improved as well.
Yeah, so I would prefer that he sticks with United Beverages. There, I think the UK, the tariff policy between India and UK will be beneficial to United Beverages because, they import a lot of their beers from there, and that also the duty coming down will be a positive for them to push their sales. Now with the stronger promoter coming in, I think the, potential for UBL is much better. So I would stick with UBL. Varun Beverages for the longer term, if you're really a long-term investor, yes, but I would prefer buying it at lower levels because the valuations are extremely expensive. So I would say if you're buying it right now, I would prefer UBL. Varun Beverages, you could look at it at declines.
Okay, all right. So UBL is preferred over Varun Beverages at this juncture. GSR Sai is writing in from Hyderabad asking about a few frontline companies. I'm going to take the opportunity to ask a couple of these, right? Because they are something that a lot of people look at very closely. Reliance Industries bought at levels of 1,218, 975 shares owned, and HDFC Bank 408 shares bought at levels of 1,528. Both stocks have gained from the low point over the course of the last several months and are doing reasonably well. He's looking for a long-term view. Can he add more of these? And is it a good idea to, or rather he's looking at stocks with at least 80% domestic focus. Okay, that's very specific. And there are quite a few in that list. So unfortunately, it's going to be tough to give you a view on that. But China, on the fundamentals, if you were to look at HDFC Bank and Reliance Industries, would you say the valuation picture for both of these are still compelling? And would you pick, or maybe let me draft this question in this way: which stock or couple of stocks would you pick from the whole list that is primarily domestic focused?
The two stocks that he's picked up, I think, definitely are, the leaders in their space, both banking as well as, I think, Reliance. I would look at more of it from the Geo angle. I think that an eventual listing over the next 1 to 2 years will give you that opportunity for value unlock. So I would think that he can continue to hold both. Both are looking good at current levels to hold for the long term. He can, of course, and especially in this volatile markets, I think these are the stocks to hold. He can add other sectors also, but I think these two in their respective sectors are good.
Right, so that's a view on both Reliance Industries and HDFC Bank. Amit is calling us from Dubai. Very good morning, Amit. How can we help you today?
Hey, morning. Thanks for hearing me out. Question to your expert, Shahina, and everybody else. So I have this share called Aditya Birla. It's called ABRFL. Today is the record date. I've got 500 shares and I've probably bought it at $310. Let's see how this demerger thing holds and whether it will add some value. But right now I'm wondering what to do with this because it will get split, right, or whatever. And, I really don't know whether this is the right thing to do. So I just want some advice. Do I hold for the long term? What do I do?
Okay, yeah? So Aditya Birla Fashion and Retail is the name of the counter that you're talking about. Got your question, Amit.
That's right.
Let me go to Shahina on this one. As he's pointed out, it is in focus on account of the corporate update today. Today is the record date. What would you say, or rather today is X date, right? So what would you say as the outline for the strategy going forward for ABFRL?
ABFRL, in my view, you can actually exit. In fact, you can consolidate in AB Capital. There I believe the opportunity is much better because not only the NBFC is doing well and it holds both NBFC, it is also consolidated the finance business into AB Capital. Also you have their insurance, AMC is also doing well. So I think there the valuation is also attractive. So you consolidate in AB Capital. I would say you exit from ABFRL.
All right, exit is a call. It's something that is, it's a demerger, as you pointed out, Amit, and that's the reason why the share price has dropped. The spin-off is kicking in. So the advice is to exit. Hope that helps. We've got a question from Venkat, who's writing in from Andhra Pradesh and asking about Dixon Tech. This is a share that he's held and an average price that he's acquired at 15,565 rupees. He bought this yesterday and he's asking if he can hold for a period of 6 months. The stock is under pressure today as well. It's down about 2.8%, and because of the quantity of shares that he's bought, he's incurring a loss of about 2 lakh rupees. I think he saw the drop yesterday and he attempted to buy the dip. It forms about 12% of his overall portfolio. He points that out. So he's not overly exposed to this one counter. Kush, on the charts though, since he's got a 6-month time frame, what's the strategy that you would employ?
Well, kudos to his courage first, at buying at the dip. I would have preferred to perhaps wait one more day. We're seeing that because the 15,100 to about 14,800 zone is a good support zone. Also, some of the key averages lie there. So perhaps this should act as a support for the stock. In any case, given the downward momentum, you are better off, continuing to hold on to this one, but place a stop loss slightly deeper. So 14,400 is where you place that stop loss. On the whole, I think the medium-term structure for the stock is fairly bullish. It could, well resume its uptrend. Also, maybe China can throw some light, but from what I heard, the numbers were good, but the stock did give you a sell-off. So 14,400 is the stop loss. Continue to hold. Once this selling subsides, the stock could go sideways and then recover. So from a 6-month time frame, I think the target on this one on the upside are 16,200 and 17,400. So I think you should continue to hold. Keep a slightly deepish stop loss, factoring for the volatility in the stock.
All right, Dixon Tech is the stock that we've just spoken about, of course, and it's a hold at this juncture. Remember that the valuations is the big question mark, whether or not it is a little too stretched at this point, and that's why post results yesterday, because there's a slight deceleration in the earnings growth that is being projected, and it's still growing very fast. The question is whether the valuations were justified. So it's seen quite a bit of a drop from the day before yesterday's price. Now, I did mention this at the start of the program, but I do want to reiterate, we've got Know Your Company, which starts at 11:30. The focus today is going to be on a company called Protean eGov. You probably heard about it because of the update that the company sent out just a short while back. It is in the headlines because it has lost out on the PAN 2.0 project, which forms a pretty large part of the revenues, or has formed in the past. The question is, are the fundamentals strong enough to withstand this shock, and what's in store for the company? All of that and more on Know Your Company, so do check that out. In the meanwhile, let's turn to another stock, and we've got a caller coming through, and Murli is calling us, I believe, from Bengaluru. Murli, hi, thanks so much for calling us. How can we help you?
Thank you very much. And thank you for taking up my query also. I bought, hello?
Yes,
I could not hear you.
I'm right here.
Yeah.
I'm right here.
I bought 500 shares of Gulf Oil Lubricants at the rate of 1239.
Right.
The good dividend yield and very low PE company. But today I'm incurring losses. What shall I do? Is there a better option, or shall I hold? I'm willing to wait for more than a year. Okay, you're willing to wait for more than a year, and I've gotten that view. So Shahina, let me ask you this. Gulf Oil Lubricants, so obviously in the lubricant space, it depends on aftermarket sales as well, and to a certain extent the input costs, crude oil has a bearing. What is the view on the fundamentals? Should he hold on?
Well, he can hold on. Actually, the numbers were a bit disappointing, which just came out day before yesterday. So I think that is why he's seen some bit of a correction. I mean, fall from his buy price. So the numbers were a bit disappointing, but I would say that valuations are not too expensive, as well as the balance sheet is pretty strong. So he can hold it from here. He can keep a stop loss close to about 1060. It's a very short term stop loss, and he can hold it. If he can continue to hold for the medium to longer term, should look better because of valuations being decent.
Okay. Okay, it's a combo question, and people are being very, very smart with this, I must say. I generally try and take one stock per viewer, but Satyan has asked a combo question. He's asking, should he book profits in Eris Life Science at current market price and shift to something like a Dodla Dairies for a fresh long? What's the view here? A couple of stocks to look at. Kush, would you go long on Dodla Dairy right now?
No, not really. The stocks actually had a good run, over the last month or so, but now it's starting to consolidate, and the 200-day moving average resistance is perhaps acting up on it. It's given up gains that it had in the last 3 to 4 sessions. So for me, this is actually now starting to go a little sideways. Just on the flip side, Eris Life Sciences is actually doing well. So I would actually continue to hold on to Eris Life Sciences, which I believe is his existing position. Now, there's a mild resistance around the 1520 mark, but given the kind of relative strength the stock is witnessing, it's up even in a market, like this. So I would actually continue to hold on to Eris Life Sciences. I would place a trailing stop loss near the 1490 mark and continue to hold on. A sustained break above 1520 and a closing above that will actually push the stock to 1550 and higher levels. So continue holding on to Eris Life Sciences.
All right, so that's the view on Eris Life, and don't go long on Dodla is the view. Sandeep is calling us from Bengaluru. Hi Sandeep, how can we help you today?
Hi Alex, good morning to you and both the panelists. I got some cash I'm planning to deploy in Punjab National Bank for a time period of around 6 months.
Okay.
My question is, what could be the best entry point for a better risk reward?
Okay, I'm curious, why are you picking Punjab National Bank?
A bit interested in the banking sector at the moment with the kind of what's going on with the policies. Yeah. I already got some money in SBI, so I'm trying to get into a kind of little smaller bank.
Got it. Relatively. All right. I got your question. So Kush, on the charts for a 6-month time frame, public sector bank, Punjab National Bank, would you buy?
Well, I'd wait up just a little bit. The reason being that for something like a PNB, there is the 200-day moving average resistance plus a falling trend line resistance acting up at the 102 zone. In fact, for the last 4 sessions, that's the level that the stock has not been able to close above. What I would suggest is wait for some more time. This is a buying on a slightly higher level, but in that case, what will happen is that the supply pressure around this level will be taken out. So once the stock closes above 102, I suggest you're better off buying at that level, because after a good run, a lot of PSU names, especially Punjab National Bank, have actually started to consolidate. So a break above 102 will give you this clear run, and on the way up, it could well hit 107, 112 kind of levels also in the coming 6 months time frame, which is the time frame that you mentioned. So hold up, let it close above 102. That's when you can enter, and in that case, keep a stop loss near the 97 mark. So mildly positive, but waiting for a strong closure above 102.
All right, so that's a comprehensive view on Punjab National Bank. Prishon is calling us from Kerala. Hi Prishon, how can we help you today?
I just want to know about a stock which I'm currently holding from the last couple of months. Its name is Usha Martin.
Right.
And I hold like around 6,000 shares, and I bought it at 342.
Okay.
So I just want to know what will be the future of the stock. I'm ready to hold it maybe for a short period, maybe 6 or 1 year time.
Okay, 6 months or 1 year. Kush, on the charts, a pretty straightforward question. Would you hold? Border levels of 342. Quick answer.
Not a very encouraging setup. I would suggest an exit. The stock has not been able to take out 340, the key resistance level.
Prishon, hopefully that answers your question. It's a sell call on Usha Martin. MTAR Tech is the name of the counter we're talking about next, and Gopika is writing from Chennai. She's bought at levels of 2,444 and asking whether to hold for the long term. She's got 5 shares. On the fundamentals, Shaina, what's the view?
Yeah, it's a hold at current levels. It's a small cap stock in the defense space, so you can hold it.
Hold it is a view. All right, it is now time to go to the rapid fire segment, and this, both of you know what this is about. We throw as many questions at you over the course of the 2-minute time frame. Do answer as quickly as possible. Vatek Wabag in focus on account of earnings, and we've got Rajan Iyer, who's bought at levels of 1,508. He's looking to hold for the long term. Should he do so, Shaina?
Yes, he can continue to hold.
Okay, Adani Enterprises, coming back to you. We've got a viewer who's bought at the current market price, I think, at around 2,500, looking to hold for 5 years. Can it give 15% CAGR? Shaina?
I don't know about 15% CAGR, it's too aggressive, but at least as of now, for the shorter term, it looks like a hold.
It's a hold, all right. Rubel is asking about Ease My Trip. He's got 2,000 shares at an average price of 20. Would you hold or exit? Kush?
Exit.
Exit is a view. We've got, guys, you've got a whole essay type questions here. All right. Embassy Developers, the next counter. Baby John is asking about this. Bought at levels of 130 rupees, 950 shares. What are the fundamentals? Would you hold for the long term, Shaina?
I would say it is better to exit as of now or switch.
Okay. Switch to what?
Maybe DLF.
Okay. Andhra Pradesh is Andhra Paper, apologies, is the name of the counter, and Venkataramanan is asking this question. Bought at a price of 95.9 rupees. Would you hold for 10 months? Kush?
No, I'd exit.
Triveni Turbine, bought at levels of 613.4. Rajshri wants to know, would you hold on to this right now, Kush?
Yes, keep a stop loss near the 540 mark.
Okay, CG Power, would you enter for a period of 1 to 3 years at this juncture? Aman wants to know. Shaina?
I would prefer buying it a little bit of dips, but yes, you can buy it.
Okay, we spoke about Dixon. Smithy wants to know, between Dixon, Keynes and Amber, which would you buy for a period of 2 to 3 years? Shaina?
Keynes. I would buy Keynes between the three.
Okay, and Kush, what level for Keynes?
It's a good level to buy it at the current level.
Okay, that was a bonus question. All right, thanks so much to the both of you for joining in. Always a pleasure having you on this program, and I think we've addressed quite a few stocks. Thanks so much for joining in. It was an absolute pleasure bringing you to this show, and if we didn't get your question answered, well, sorry. Hopefully the rest of the stocks that we discussed have benefited you. Do stay tuned. As I pointed out, KYC is up next, and this is NDTV Profit.
That's huge. That is a biggie. It's out of there.
गोल्ड प्लस क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company. Well, today we're going to talk about a company which has been in focus and who we've been wanting to talk to for a while now. The stock is down 24% in the last 5 days, and here's why it's interesting. It was supposed to be one of the very few players in the running for the PAN 2.0, but it's not won that mandate. A company that does your KYC is something that we're going to do on KYC today. So let me start off by explaining what a Protean eGov Technologies does, and before that I want to try and quickly highlight what all I want to know from them. So the first one is, what's the impact of missing out on PAN 2.0? And this is not with regard to just the top line impact of 1440 crore estimated by some analysts. This is an impact of confidence. What does this do in terms of one of the very few players driving digital public infrastructure in the country and missing out on a mandate? What does that mean for it? And hence you're not seeing a recovery on the stock. So that's what I want to ask management. That's the first thing. The second key piece is, what's the impact with regard to numbers? What's the impact on EBITDA? What's the impact on the business overall? And what's the impact on the existing business of not winning the PAN 2.0 mandate? So those are my questions. Then what's the reasonable growth expectation on the back of this? So we put this behind us now. What should one look for with regard to this company going forward? What's the reasonable expectation that one should keep? Now, the third one is, why have margins compressed sharply? And they have. We've seen the EBITDA number was well into the mid-teens to high teens just about 4 years ago. So why has there been this very sharp compression? What has changed in the industry dynamic? And fourth, what is the export stroke new business potential? And what's the competition, especially in the export market, looking like? You've seen competition even in the PAN 2.0, and now when you go and you export some of your services with regard to digital public infrastructure, what could the downside risk to that be? Essentially, these are the questions I'd want to have answers to when I speak with management or when I analyze this company in better light. So hopefully we'll be able to get those answers. Let me start off about the company. Now, in terms of Protean, it was incorporated in December of 1995. It's an IT-enabled solutions company. It creates digital public infrastructure. So this is, of course, largely relating to infrastructure on portals and platforms that you use when you interact with the government or you apply for certain either a pension or either your PAN card. So, and that's what they are involved in. They create that fundamental IT-enabled solution for digital public infrastructure. That's what the company essentially does. Now, it was previously known as NSDL E-Governance Infrastructure Limited, thereafter got listed separately and now is completely not associated or affiliated with that NSDL setup. In fact, they were substantial shareholders, no longer so. But what it actually does, and we'll try and break this down in better fashion, it's the largest issue of India's digital tax identity, which is the PAN. But even outside of that, it is also involved in the digital identity itself, not just digital tax identity. So PAN and TIN, which is the tax identification number, is what they issue. But outside of that as well, they do several things on the pension front, and I'll come to that. It also has developed innovative citizen-centric e-governance solutions and developed 21 nationally critical e-governance stacks. So more software, all of what you're looking at is more of software coupled with documentation and implementation on ground, the support that the government needs to implement some of the registrations that it allows. So all of those is what it encapsulates. Now let's look at the breakup of the revenue, and this will give us better perspective on exactly where the money is coming in from in terms of services. And we look at the FY24 numbers along with the FY25 numbers once we have them on the screen. When you're looking at the FY25 numbers, around half of the top line has come from tax services alone. So 420 crore out of the 840 crore number has come from tax services revenue. 840 is the cumulative number, 420 is what they've done in tax services, and you'll see that it's come off. When you're looking at pension services as well, pension services is at 280 crore of the 840 crore number. So around 30% comes from pension services, around 50% from PAN services. Identity services is the new vertical which contributes around 100 crore, which is roughly 12.5%. And then you have new businesses which contributes around 35 crore. That's how it stacks up. So you have tax services and pension services which contributes a bulk of the top line, which provides the stability to the top line. And then you have all these other services which they are venturing into. But the main category is tax and pension. And let's talk about exactly that. So this is how the revenue share stacks up. This is FY25. Let's look at FY24, and the data is not very different. You're looking at around an 84% mix between tax services and pension services, even in FY24. Let's look at again. Let's try and understand. That's the manner in which pension services revenue has gone up. So you're seeing a decent clip of growth there, but you're not seeing a substantial growth, as you can see in the numbers, just about 10% or so, even from pension services. But let's talk about PAN first. It issues fresh PAN cards, reissues, updates PAN cards, runs tax information network facility centers. All of those is what it does in terms of offering services. In fact, for the PAN, it's the leading in terms of market share of around 64% of all PAN cards issued. It has issued over almost 53 crore PAN cards and is the first digitally verifiable ID which has been generated through PAN, has been generated through Protean. In terms of again, PAN cards issued per year in India, it's around 7 to 8 crore. So the opportunity going forward also is substantial. You're looking at tax services revenue. If you look at the way in which the journey has been, of course, we've seen a dip in FY25, but outside of that, it's been a reasonable 10% kind of increase. When you're looking at PAN issuances as well, annual PAN issuances, they've been in the range of 6 to 8 crore. In FY25, saw a spike, but outside of that, it's been around the 6 to 8 crore number. When you're looking at pension-related services, it acts as the central record-keeping agency. It's established IT infrastructure, handles administration, does customer service functions, and as the subscriber base increases, the business grows for a Protean. So the subscriber base keeps going up. We've seen that go up. With regard to pension, it was up 40% last year, and it continues to grow at a healthy clip. Let's talk about social security and welfare. Within this basket, it is within the NPS and the Atal Pension Yojana, which is APY. It has a 97% market share in this particular, or providing this particular service. And it's the sole provider for foundational identity services as well. The Aadhaar eKYC, the Aadhaar authorization, the e-sign, and the online PAN verification. From all of these four, it earns around 100 crore in top line. So those are your other services and your new age services which are contributing to top line, even though top line has contracted in this segment. So that is the other piece that you'll want to look out for as to how growth sustains there. Now let's talk about all the factors and metrics we look for. We hope we've tried to break this down the best we can. Software plus digital public infrastructure enabling services. That's what this actually does in terms of the company. Let's look at now all the metrics we'll track. Income statement, balance sheet, cash flow, return ratios. We'll also look at shareholding patterns, street cred, street coverage, and we look at valuations. So all of those 8 we'll try to cover. Let's quickly get to it. Income statement. You look at the revenue CAGR last 3 years, just 7%. EBIT has actually contracted when you're looking at it over the last 3 years. So you're seeing pressure with regard to EBIT and therefore pressure with regard to profit after tax. We will quiz management as to why this is coming down in terms of margins. But for the moment, the performance on a standalone basis, not looking good, and therefore we've given it a thumbs down. And this is a 3-year CAGR you're looking at. Even when you're looking at the last 1 year's performance, Q4 to Q4, because the numbers have come out, you're seeing some bit of margin dilution. You're seeing pressure on the top line as well, absolutely flat. Let's look at the balance sheet now. The balance sheet though, in contrast, looks much better. You're seeing good positive net worth of nearly 1,000 crore. You're looking at a cash and bank balance of around 140 crore out of that 1,000 crore. So on a balance sheet of 1,000 crore, to have 140 to 150 crore of cash is quite good, and that's what they've done in the last 2 years. That's possibly a positive. There's no debt on the balance sheet, so no risk per se. So that too is a significant positive. Now let's look at cash flow. In terms of cash flow from operations, we've seen FY24 cash flows at around 100 crore, FY25 cash flows at around 200 crore. There's significant